Good morning, traders. Give me a check here. Let me know if you can hear me. I know we're having some trouble this morning. Quick check. Looks like I'm online. Uh, it is 8:16, 8:17 a.m. Chicago time. We're going to fight this. We're traders. We don't give up. We don't go down so easily. So it's 8:17 a.m. Chicago time. This is another Trader Bite on Monday, the 23rd of May, 2016. Hopefully the feed is a lot better. There was an issue streaming earlier. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. There is no way for me to cover what I needed to cover for a Monday morning. Monday morning, we want to look at the week in advance and look at some longer time frame charts, and we're not going to do that this morning, so I'll have to cover it tomorrow. I was going to look at weekly and monthly um, profiles and such. So we'll skip that. I wanted to say the first thing is that the big news overnight is that Bayer, the German pharmaceutical company, has put out a bid for $122 per share for Monsanto, valuing the deal at $62 billion. The price of the shares is about 37% higher than Monsanto's closing share price on Friday. And what that's doing is it's pushing Bear shares down. Bear constitutes about 3 to 4% of both the Euro stocks and the DAX. So the DAX has been down as far as 6806, about 40 points lower than where it is down now. The DAX is down 0.64%, and the Euro stocks are down 0.61%. They've regained a little bit, but overall, that's weighing down the German and the Eurozone markets. Overall, not too much else to report. The PMI numbers out of Japan were pretty poor again. Japan reported preliminary PMI manufacturing at 47.6 versus 48.2, the third straight contraction, biggest decline since December 2012. Remember, below 50. We have contraction, and then on top of that, total merchandise trade balance in Japan came out at 823.5 billion yen, the third straight surplus versus 540 billion expected. Um, and those are the key drivers. There was a Fed Williams comment at 7:05 a.m. Chicago time. He says that we're expecting about 2 to 3 hikes in 2016, about 3 to 4 increases in 2017. That's really important. The timing of the rate hikes depends on economic data, so we are still glued to every economic release going forward. So that's how things are going to play. Uh, as far as what we've got for this week, um, looking at the weekly calendar, the busiest week is likely to be Wednesday. Today we have today's calendar. We have U.S. manufacturing PMI prelim expecting, this is for May, expecting 51, and that comes out at 8:45 Central, 15 minutes after the open, 25 minutes from now. And what else do we have today? Other than that, really nothing else on deck. Not seeing any major earnings or anything like that. Uh, but for the rest of the week, tomorrow we have the Zoo survey out of Germany, also GDP. We have new home sales, ECB's Pratt and Light Cannon. Wednesday we have the GFK conference number, IFO business. In Germany, we also have U.S. housing prices, services PMI, ECB's Constancio, Fed's Harker, Kashkari, and Kaplan. Very busy day Wednesday. Thursday, UK GDP index of services, US goods orders, home sales, Fed's Bullard and Powell, and Friday is the US PCE GDP University of Michigan. Also Friday we get Fed's Yellen. So that's how the week is shaping up. Let's take a look at what we did on Friday. Friday was a pretty quiet session. If you recall, and this is what I said pre-market, what was expected pre-market, the primary hypothesis we're looking for is for a test higher. Let's resize this. Let's make sure it's 1080p. There we go, nice and crisp. Uh, we said I was looking for um, a test, an open auction out of range. If we get, and if you recall, the difference between Hypo 1 and Hypo 2 on Friday was where is the first test? If we get a first test higher and find sellers around that 49 area, then we're likely to push down to 35, which is the value high and that key liquidity level, attempt to go out of range, and then drop to 27 being the target. That's not what played out on Friday. Uh, Hypo 2 played out on Friday partially. So moving forward in the video, there's Hypo 2. We talked about how the point of control was moving down from day to day to day along with price action. So we're getting lower highs. As you can see here, we have lower highs for the day. So we're one time framing down. And we continued to one time frame down, and then we looked at reversing that on Friday, and we did. We opened above the market. We expected the point of control to move higher, price action to move higher, and then on the second hypo, we're looking again for an open auction out of range. Because why? Because we're still in the balance zone. And then we're looking for an initial test down, but what we're after for Hypo 2 was to see that buyers are found and for it to drive up, and we're looking for 61 quarter as the key target. That is again not what happened on Friday. It was the idea behind Hypo 2 is what played out, but we found those buyers almost immediately after the open. And so we ended up with a small drive-ish behavior right off the open. Volume on the open was higher than usual. You could see the volume bar is much higher than its corresponding yellow bar, the average, the 20-day average shown here. So we had a pretty strong buyer participation on Friday, a lot of covering it seemed, and then for the rest of the session we just basically went sideways. We pushed to 55.50 and we built basically a very upward skewed high kurtosis balance profile. Volume was pretty decent on Friday. You can see there aren't that many tails showing up here on the volume per slice of time, per 15-minute bar in this case. The volume was okay on Friday, but overall the market just didn't have it in it to push through and get to that 61. So it neither played Hypo 1, nor Hypo 2, and I didn't actually have this in Hypo 3, 4, or 5. I did expect that a lot of this volume that's been playing out to the downside and the price action on the downside, especially on these big days here, big down days, I expected more power to the upside. I have 5 minutes to close this out, so it's going to be abbreviated. So looking at that, and what we did overnight, which was nothing. The overnight session had about average volume. The volume on the overnight is 221,000 contracts. But again, we have a very balanced profile. The market has tested lower, higher, and is trading in the middle. It's trading against the overnight point of control. It's trading against Friday's close. It is trading in the mid of the session. There is nothing to price in here. Okay? But what this means is we're likely to open in a very short time frame controlled environment. What does that mean to us? It means that you and I, as day traders, are likely to be the highest participants on the open. You and I generally do not push the market in a directional fashion. It is the higher time frame, the institutionals, the investors, the banks, the sovereigns that do that. We call those OTFs, and that's what's likely to drive the session on the open. And I'm expecting And again, this is just an expectation or a plan. I'm expecting that those participants will not likely be active as there's nothing here to price based on how this profile played out versus Friday's play. And so what we have is what's likely to be, excuse me, what we have is what's likely to be a coiling day. The expectation is that we are likely to build some volume. We have a gap zone beneath us, and that is a vacuum. When we have a gap zone, essentially what that means is the market has not traded or tested an area recently. So if you use these flex levels, these have been were updated last night. If you use these flex levels, the gray bar that you can't see here, so let's expand it out. You see there, it says gap zone. Actually, I should have put in the date. I'll get that fixed. But we have a gap zone from Friday that's unfilled. We have a profile that is trading the mid of the overnight session against the point of control. So to me, if the market opens, and that's my primary hypothesis, if the market opens and finds sellers early, then we're likely to go for the gap zone. We're likely to test this 2035 fairly early. Okay, so primary hypo, chop, 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 chop. If it makes an attempt higher and falls back through the opening swing, then I'm looking for a pullback, break into the gap zone. The mid of the gap zone is 41 and a quarter. Pullback, break through, and I expect a test of 2035 as the key target below. This would be a blessing if we do get this sort of a move. It'll actually give us a little bit of volatility, although today is expected to be fairly quiet. The other hypo 2 is likely to chop around, test the overnight point of control, move up, test the microcomposite point of control. The largest volume price, the highest volume price in this area is 51.50 or 51 even, and we're likely to get trapped here, make an attempt higher, but overall I expect us to close potentially neutral day type of environment, and I expect us to build more balance. So here's our balance. I expect us to build more balance, potentially a little bit higher. That's your hypo 2. And then hypo 3 would likely test the high and the low of Friday. The high and the low of Friday, the range of Friday was only about 12 points, which is lower than what we've had recently. So we could potentially get an outside bar this morning. Although, again, I expect that the short-term traders will likely be in control. I know there's a lot that was covered there. I'll let you get back to trading. The market opens in 1 minute. Sorry about the delay today. Good luck, and I'll catch you tomorrow morning. Take care.